What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 26, May 15th, 2023. We made some trades today, so let's get into it. So coming into today's session, my goal was to only trade my best setups and to maximize every single trade that I had, meaning that I want to make sure that my entry is correct, my trade management is correct, and my exit is correct, and then I would feel like I did a great job. So before we get into our analysis, let's go over these levels that we have on the chart. We only have one major one up here today, and that is the closing price from Friday's session, and that is represented by this blue line at about 33,354. So that's yesterday's closing price. So let's go ahead and start our analysis at 9:30 this morning. So we came into the market. Now you can't see this off screen, but we were in a downtrending channel, and we actually broke through yesterday's closing price about 5 minutes into the open, and from that point forward we just had a huge spike to the downside. Remember from last week also how a lot of days we had huge spikes to the downside to start the day, so that's another interesting bit of information to just take note of. So we have a sharp downtrend to start the day, and then we form our consolidation zone. Now this consolidation zone actually started to set up one of my favorite patterns, which is a downtrend reversal with a higher low that gets established. So I look for a strong downtrend. I look for prices to come back, create a higher low. Off of that higher low, I create a support level based on the lows for the body of that higher low, which is this green line that we have up here today. And I extend that across through the market, and then I look to go long on a retest of that higher low support level. So that's exactly what I look for on trade number one. So then as we move on, we see that prices actually hit the top of the zone, came back down to the bottom, but actually started to close below the bottom of the zone, and that's where I created this level of support right here. Now notice how once we came back up into the zone, we kind of found resistance at what used to be support from that higher low. So that's actually a key thing in the market that always happens. A level of support that gets broken through then becomes resistance as prices move back up into that level. So that's an example of that happening right there. So also notice how the support line of that higher low also lines up with the bear channel line that we had drawn based on the swing high from earlier, connected that with the lower high that got established after trade one. So when you extend that all the way through the market, it actually lines up and intersects with our support level from the higher low. So once I saw those two things coming together, I said, okay, if the trend is already down, that would probably be a good entry point to look for a short trade. So that's why I went short. Let's read the notes. It says, I shorted here as prices hit the bear trend line that also lined up with the higher low from trade one, and my break even stop got hit. So when prices move in my favor by enough points, I move my stop to break even to protect myself. And if the break even stop comes back to get hit, hey, I'll just accept it and roll with the punches. So that's exactly what happened on trade two. Came back for a break even stop, but that trade actually ended up working. So that gave me more confidence because I'm saying to myself, well, even though I got stopped out for break even, my entry was still good. I got in at the best possible price. I just couldn't take it this time. But in those situations, if you take that trade 10 times out of 10, you'll come out pretty good on the other side. So I'm happy with my performance on trade two. So then after trade two, we actually came back down to retest the support level from earlier when we first closed below the zone, and we actually created a double bottom right here. So anytime I see a double bottom, my first thought is, okay, once you see a double bottom, now you need to look for a higher low to get formed. So once we saw the double bottom form, and then the higher low, coming out of the double bottom, we saw prices push back into the zone. They never even hesitated once they got to the zone. They pushed through on this candle, broke through on the next one, and went straight up. So after I saw that, I said, okay, more than likely they need to create a higher low after we just created a double bottom. So I anticipated this trade a little bit. Rather than being reactionary, I was a little bit proactive because my train of thought was, if the zone represents a level of support that's already been respected so far, then more than likely the higher low should get formed right on top of the zone, and we can go long and take it from the bottom of the zone back to the top. So that was my exact idea right there for trade three. go long at the bottom of the zone, and I expected the higher low after seeing a double bottom form below. Now, the only thing about trade 3 is that I didn't get the best possible exit price because I expected prices to come back up and retest the same level that I got out of when I exited for trade 1. So that's what I was thinking on trade 3. But what I ignored was the fact that there was these two tweezer tops over here. And if you look at, let's zoom in. If you look at how close these tweezer tops are to the top of the zone, I mean, that's only what, like a point or two. So it's not really something to stress over and say, oh, I'm holding out for every single last point. I should have saw prices come up to that level and just automatically taking profit because that's the swing high, right? So on trade 3, even though it was positive, I left like 12 points on the table, and that's really what's been stressing me out these past couple of weeks because I've been taking really good entries. I'm very proud of myself for doing that, being able to identify the market that I'm in and trade it correctly. But that's not the complete process when it comes to trading. You have to take a good trade, manage it the right way, and get out with a great exit price. And if you don't, then really the trade process was incomplete and you're not reaching the maximum potential that you could for your trades. And that'll affect you in the long term when you take losses, because then you won't be able to buffer those losses like you should because you didn't get as many gains as you could have gotten in the past. So trades like trade 3 just really frustrate me because it's something inside of me that always is aiming for more and always aiming for continuation. But I just learned over time that I'm not that kind of trader, man. I'm not the type to hold it for 100 points, a 200-point move. I'm the type to hold it for a 20-point scalp, get in, get out, and then look for the next best opportunity and try and find a 20-point scalp again. So I need to alter my mental mind frame and stop trying to get more than what the market is offering. If the swing high is right there, that's where I should take prices. So that's the lesson that I learned from trade number 3. So after trade 3, we see prices just completely break through the zone on strong momentum. We had 1, 2, 3. We had a 4-candle bear spike to the downside. And after that, we formed a little bit of what you could call a consolidation zone. I would call this a micro consolidation zone because it's smaller than 20 points from top to bottom. I think this one was actually about 15 points in total. So on trade 4, I shorted at the top of the zone, but I was too scared to hold the trade, and I need to accept the risk that comes with my best setups. And that's something that I was talking about last week too, where I took so many good entries, but I closed them out early without giving them room to run because I just didn't want to see the trade go against me. And I think sometimes that could be one of my flaws too, because I'll have a good entry and I would want the entry to be completely green the whole time and never turn red. And it's like, okay, if that's the case, then I feel like I would be cutting out a good majority of my trades because sometimes the market is going to go back and forth a little bit before it goes in your direction. So you don't want to just cut the trade for a very small loss if you feel like your idea is still valid. Now, I think a time period for me to cut the trade short is something like, let's skip over trade 5 real quick and let's go to trade 6. It's something like trade 6 where you saw what you did and the idea that you had for the trade is no longer valid, so you quickly get out before your full stop loss gets hit. But that wasn't necessarily the scenario on trade 4. On trade 4, it was just a regular back and forth with the market moving before it goes to my actual target price. So I need to learn how to accept the risk that comes with my best setups. That's something I'm still working on and still trying to get better at. So for trade 5, we come back, we retest the top of the zone, and I take the same entry as trade 4, except this time I'm like, look, when we get to the bottom of the zone, I'm taking my profit and I'm doing exactly what my trading plan says. So I had some temptation right here to keep holding it also, because let's zoom in a little bit. If you look at this bottom candle right here that tried to break out of the zone, the way that it closed, just looking back on it, doesn't really give an accurate representation of how it actually performed. So it opened at the lows of the zone and then it quickly shot down like in maybe 1 second or a split second. So if you remember Friday's session on day 25, I was telling you how sometimes when big waves of momentum come into the market, it could lead to a bigger move one way or the other. Now, in this scenario, it was a bigger move to the upside. Now, in that time period when I was in the trade, I was thinking to myself, if we just had momentum come into the market, I should keep holding the trade, because if the trend was already down, the momentum that's coming in is probably telling me that it's another strong down leg that's coming in the immediate future. But despite me having that thought, which I think is a valid thought, it's very well put together, but that's a representation of me thinking too far ahead. I'm thinking about the move after this one. But I think it's more important to focus on the move that you're in right now. Focus on this trade first, and then the next trade after you get done with the one you're in. So I think at trade 5, I made the right decision by not deciding to hold it for a bigger potential swing trade. If I went short at the top of the zone and prices came to the bottom, let me just take profit right there. So that was my line of thinking on trade 5. And then we talked about trade 6. So, but let's actually break it down in more detail, because I tried to take the same entry as trade 5. But what I should do is I should not double dip after a good trade. And that's usually something that never works for me. When you have one good trade, you identified your setup and you traded it the right way, you don't really want to take that next second setup, because most of the time the second setup is not as lucrative as the first one, because everybody that already made profit off of the first one, not everybody is sitting on the sidelines, but some people are. So it's just not as many people participating in that move the second time as it was the first time. So that just decreases the chances of it being successful on the second chance. It doesn't mean that it can't be, but it just means that the probabilities are lower. And that's exactly what happened on trade 6. But once I saw the higher low get formed and I shorted at the top of the zone, I was like, well, if it's a higher low right there, no matter how I feel about the zone, I just shouldn't go short against a higher low. So I closed the trade out right there for a little small loss. And if you see, it actually would have went up to hit my actual full stop loss target. So that's a scenario where I feel like I should cut a trade early on trade 6. So then we see prices after they created this higher low at trade 6, they come back, retest the top of the zone and the bull channel line, continue higher, push back into the zone on this candle, but they weren't able to close inside of the zone. But once they close inside of the zone on this candle, I put my order at the bottom of the zone. Once this candle closed, I got hit on the next candle at trade 7. And then my goal was initially to take prices back up to the top of the zone, but trade 7, just like trade 3, was just me leaving points on the table. Now trade 7 was different, because when prices got back up to the swing high from earlier, I realized my mistake from trade 3, and I was like, look, this time I'm getting out for a profit. But this was actually the time where I should have held the trade. So what I like to do is I like to give myself what I call a 2-minute rule. When you're in a good trade and it's getting close to your profit target, and you start getting feelings of, I don't know, it's only a couple of points away. What's a couple of points? Let me just get out right here and take my profit. What I've learned is that you just have to give yourself 2 minutes. So as soon as you have the thought about, let me get out right here, nope, put your timer on for 2 minutes and just let your trade do what it does. If you have to get up and walk away from the screen until your 2 minutes is over, do whatever you have to do. But give yourself those 2 minutes, and more than likely, I promise you, your exit and your target profit is probably more than likely going to get hit. You just got to be patient. So that's where I dropped the ball right here on 7, and that's just so frustrating, because on 3 I left 12 points on the table. On trade 7 I left 10 points on the table. So that's a whole nother 22 points that I could have had without doing any extra work, but just by maximizing the opportunities that I decided to act on in the market. So I mean, that's where I called it for today. And I would say, like, overall, man, I made profit. It was a good day as far as like the point amount and the dollar amount goes, but it's just frustrating because I see good trades that I should be making more on, and I'm not capitalizing on those. So that's really my main focus, just not only to have a good entry, but to have a good exit. I'm doing 2 out of 3 things correctly. I'm having good entries when I get into the market. I'm managing the trade correctly when I'm in it, but my exits are just suboptimal, and I need to get better at finding the best exit prices because leaving 7 8 points on the table on my good trades adds up over time, and I really want to get all of those extras because it's those little extras that make a difference. 7 to 8 points on each trade, maybe that's an extra 15 points per day on average. Today was 22, but let's say it's 15 on average. That means over the course of a week, if I have 4 out of 5 days that are profitable, and that means more than likely I probably left an extra 60 points on the table at the end of the week, 240 points on the table at the end of the month, and that really can hurt your pockets. So I gotta focus and practice more on just maximizing my trade. But like I said before, I think it really just comes down to the mindset. Um, I think it's me not being willing to accept the risk of my break even stop getting hit. Because when it gets to a point where it's only a couple of points away from your take profit, you have two options. It's either gonna hit your take profit or it's gonna hit your break even stop. But because I'm not willing to let it come back and hit my break even stop, I close it out prematurely. Now, that's not accepting the risk. Accepting the risk is saying, I have a break even stop, so worst case scenario, I make nothing, but I lose nothing. Best case scenario, I make my 20-point scalp target and I move on to the next trade and look for the next best opportunity. So you got to be willing to accept those two choices. Those are the only two ways it can go. But I keep trying to throw in like a third option where I say, well, I'm not going to take the break even, but I'm not going to take the full potential take profit. I'm going to get out somewhere in the middle. No, from this day forward, that can no longer be an option for me. It's either break even stop or take profit gets filled, unless it's just a clear sign in the market that tells me, hey, you need to get out. Like on trade 3, that was a clear sign to get out, where the swing high was right here and it's only a couple points away from the top of the zone. Like, you don't have to hold on for those extras because it's a clear signal in the market telling you to get out. But on a trade like 7, where there's really no overhead resistance until you get to the top of the zone, you just got to hold that trade. So that's what I need to work on going into my back testing sessions tonight. Just not only being able to hold my trades, but also being able to trade the zone the proper way. Because let's go back to trade 4. I dropped the ball on that one too and left money on the table. That should have been an extra trade as well. Trade 6, that's just a loss I would have had to take. But 4, I could have cleaned that up also. So that comes back to trading the zone the proper way. And you guys have been keeping track over these past 10 to 15 episodes. I've had problems with trading the zone correctly. Sometimes I do it the right way, but sometimes I don't. But I don't want to have that much inconsistency in my decision making. I want to be clear cut and decisive with what I do in the market. So I need to work on trading the zones and being able to hold my trades and accept the risk that comes with my best setups. So I would say overall, today was okay, but I definitely have some room for improvement. And before we get off, I actually want to talk about some of the similarities in the market before we go, because when you look at the market, you don't just want to look at it from chart pattern to chart pattern. You want to analyze each chart pattern, absolutely, but you also want to make sure that you analyze the relationships between each different chart pattern that forms on the chart and how all of those things come together to create the overall market picture for that session. So I want to talk about this downtrend reversal with a higher low that got established that led me to trade 1, because this is actually one of my favorite setups, and I was studying this weekend, and what's really interesting is that almost the same way that I studied it from not this weekend but actually last weekend is one of the same ways that it popped up today. So let's talk about it. So we don't have to read all of this. I just want to touch on some key points based on this slide that I made. So this was from May 5th, 2023. So that was not this past Friday, but the Friday before last. So this is an example of the non-uniformity of bottoms that get formed in the market, meaning that all of the time, a bottom won't just be a singular point where prices reverse from and then continue and then start moving higher for the rest of the session. Sometimes it's just not that simple. Sometimes the downtrend will be so strong that there will be multiple attempts by buyers to make a bottom in formation. So on this particular day, an example, on this particular day in specific, on May 5th, we had our first bottom in formation, which was a downtrend reversal with a higher low that got established. That's what happened at point one, right? But that actually failed, and that's something that's actually very important. Also, a downtrend reversal higher low established can lead to a reversal that leads to an uptrend for the rest of the day, but it can also sometimes just result in a minor pullback if the downtrend is strong enough. So you got to be able to distinguish differences between those, and this right here is an example of a scenario where they did create that higher low, but then they had the sellers run right through it and they invalidated that higher low, so the higher low was unsuccessful. That was the first attempt at creating the bottom. Now notice how at point two, the buyers come back and create a double bottom that also led to a higher low, which is a very bullish pattern. And they were able to move prices higher a little bit higher than where they did the first time. So the first push, they had a swing high that got established, and it's hard to see. Let's just call it 580-ish. And then the next one got established at around 610. So the next potential bottom in reversal was 30 points higher than the first. So even though the buyers are not having their entire reversal pattern be successful, they're still showing signs here and there that they don't want to give up and they really want to turn this market around. So that was the second time, but they failed. Notice how the attempt was unsuccessful once they broke back through the support level created from that higher low. So after that, the reversal was invalidated, and then we pretty much just had a capitulation selling spike back down to about 540-ish, and then from that point forward, notice how we created a V pattern reversal that came back up to reclaim that level of support from the higher low from earlier, and then we created a higher low. Now notice how we created this higher low on the same level of support that the double bottom was created for from earlier, and the higher low, and almost a similar level where the initial first downtrend reversal higher low established was created at point one. So that's not a coincidence. That level is extremely important, and on the third attempt they were finally able to get above it, and then from that point forward the market went up for the rest of the day. So a lot of times in the market, let's read this last sentence right here. So always remember this: a bottom formation isn't always created on one singular try. Sometimes there will be several tries, and that's actually a very common occurrence in the market. So this right here is May 5th. Let's go back to May 4th. Where is it? Okay, here it is. So let's look at this one. Strong downtrends can sometimes lead to multiple reversal attempts, and this is from May 4th. This downtrend reversal higher low established is a great example. If there are two bottom attempts made that both fail, the chances of another strong leg down occurring increases. So notice in this scenario, we also had a downtrend reversal with a higher low that got established, but it only led to a minor pullback and not a major reversal. That was the first attempt. Then they came back down, created this double bottom, and depending on the trader's perspective, you could really call it a triple bottom. But either way, we're creating a bottom in formation for the second time, and then we created our higher low. We came back to retest it once, retested it twice, and really made another micro double bottom. If you think about it, if you think about RT1 and RT2 as two double bottom formations, because we came down, came back up, and came down. So that's actually a micro double bottom after a major double bottom. And then I'm not sure what happened after this day, but this was just an example of how you won't just have one all of the time. Sometimes it might be two, sometimes it might be three. So I have two more that I want to show you. So let's go back to the example from April 25th this year. Let's see where it gets. Nope, not that one. This one. Okay. So here's another example of how the downtrend reversal with a higher low established could sometimes fail on the first attempt. The first attempt could just be a minor pullback. You could have went long on the retest of the first level of the support line. You could have went long on the retest of the second level of the support line and made a small scalp off of that, but you wouldn't have been able to hold that trade for the remainder of the session. That's not a swing trade right there. That's just a quick scalp. So the first attempt didn't work, but when they come back with the second attempt, that's the one that actually came to fruition and ended up being successful. So a lot of times in the market, it won't just be one clear cut reversal and then the market moves up. And I have one more example that really just hammers home the point. So let's go to April 24th. 21st, actually 21st. All right, so here's the last one I want to show you. A strong downtrend will sometimes create a downtrend reversal higher low established more than once before it works. So this one was from April 21st this year. So notice how we had our downtrend. We created a downtrend reversal that had a higher low that got established, right? And this one led to a pretty good move. You could have caught a nice long trade off of going long based off the support level. But then notice how once prices came back through and broke past the support level created from the higher low, that higher low reversal formation is now invalidated. So we come back, create a bottom on higher volume, then we pull back up, we make a higher low that's also combined with more of a smaller micro consolidation zone. And then we see our second higher low get formed, and then prices move up until the market closes at 4 o'clock right here. So here's an example of when, yeah, sometimes it can lead to a minor pullback, but then sometimes it can also lead to a big major reversal where you can get maybe at least 80 to 100 points out of it. So that was actually one of the things that I was thinking about when I was looking at our chart that was setting up today, because when I saw that first downtrend reversal higher low get established, this right here was the first attempt. Now I was able to take the long trade at 1 and make a small scalp out of that, but once prices broke back down below the support level for the higher low, that chart pattern was now invalidated, and it actually led to a continuation move to the downside. But notice how right after we formed the downtrend reversal higher low established, it was unsuccessful, but then right after that we came back with a double bottom with a higher low that got established. That one was also unsuccessful. We were still able to catch a little small scalp out of it based off the support level from the higher low. But once prices come back through and pass through the support level of the higher low and stay below it and close below it, that pattern is also invalidated. So we had 2 attempts right here, but they both failed. And then we pushed down, created a zone, and then look at what happened. We had a higher low that got established, right? So that's our perfect scenario, a downtrend reversal with a higher low that gets established. Now notice how on the third attempt right here, that's actually when prices were able to move up, break back through the zone, stay above the zone, and they actually continue moving up after I took the screenshot. So they came all the way back up, I think, to yesterday's closing price at 354. So from a low of the higher low down here got formed at 225, and then they came all the way back up to 350. So that's a 125 point move right there, just off of identifying the higher low and being able to hold it for that reversal swing. So that's one of the things I'm working on with this setup. I'm trying to figure out, like, what are the specific characteristics that make a reversal different from a minor pullback? Like, what is it that separates those two? Because I feel like once I can identify that, then I can be more confident to hold those 20-point scalps for that bigger 80 to 100 point move and really make a good profit on it. So I just wanted to discuss those similarities in the market because it's something that I saw today that was just so obvious to me that I was like, man, I gotta get on here and talk about it. So always remember that a lot of times in the market, the first attempt at making a bottom isn't always successful. Sometimes it can be 2 attempts, sometimes it can be 3. And just remember also that if 2 attempts to make a bottom fail and even a third attempt to make a bottom fails, that just increases the chances of a stronger down leg coming in the future. So always make sure you try and just be patient enough to figure out what kind of movement you're in at that time. Is this going to be a reversal or just a minor pullback? But either way it goes, you can get your scalp targets out of it, and that's what I look to do as a trader. But I would recommend that you guys do what's best for you and your trading plan also. So I appreciate you guys for sticking with me to the end of the video. Hope you were able to learn something good today. Tomorrow is May 16th and it'll be day number 27. I'll be here at 9:30 a.m. sharp. But until then, you guys, take it easy.